You may learn about investing and how to make the best financial decisions for your life on Investor Facts. Make sure you click the subscription button and enable the notification bell if you haven't already. Share, like, and comment. Many Tesla supporters are aware that the stock has recently been on a tear. The price of the stock has surged by over 30% just in the last month. There is a chance that Tesla's full self-driving function has at long last been reached as the stock price resumed its upward trajectory on Monday morning, gaining by 1.4%. Make sure you watch the video all the way through because I will explain all you need to know about the Tesla stock split in today's video. Let's get going. Following the facility's achievement of the millionth vehicle milestone in Shanghai, as a result of this fact, investors are now able to see through some of the Musk-related hype. Multiple explanations were attributed to the increase in stock prices. Investors are still unsure of whether CEO Elon Musk will be required by a judge to complete his offer for the social media company. But the dispute between him and Twitter has received some new details. Investors already know how the acquisition will affect Tesla and his holdings, thanks to his recent selling of around $7 billion worth of Tesla shares related to it. Last week, Musk added that the Tesla semi-truck would be available this year sooner than anticipated. However, the company's Cybertruck wouldn't be available until the following year. The economic benefit of electric heavy trucks over diesel-powered vehicles was highlighted in a report from industry watcher Torque News on Friday. It was shown that the cost of gasoline for a 200-mile drive in Tesla's truck would be less than 1/6 of that. Wall Street and financial markets were taken on a wild ride in 2022. The S&P 500, one of Wall Street's preferred indicators of market health, performed poorly in the first half of the year for the first time in 52 years, and the Nasdaq Composite, which is heavily weighted towards technology stocks, fared even worse. From its peak in November to its low in February, it dropped as much as 34. Despite of the turmoil, investors have been captivated by the numerous stock splits that firms have announced this year. The third stock split possibility worth taking into consideration is Tesla, a producer of electric vehicles. This will be the company's second split in as many years. Investors are attracted to Tesla because its competitive advantages. It has been more than 50 years since a car manufacturer began mass manufacturing despite obstacles, including COVID-19 lockdowns at the company's Shanghai Gigafactory and shortages of semiconductor chips. For the first time ever, Tesla appears to be on track to surpass 1 million vehicle deliveries this year. In the years running up to 2020, Tesla has switched to regular profitability in addition to production. The sale of renewable energy credits to other manufacturers was a substantial source of revenue for the business. Since that time, however, the business has been able to produce GAAP profits without relying on retail sales. In each of the previous 5 quarters, Tesla reported a GAAP profit of between $1.14 billion and $3.32 billion. Investor confidence in Tesla CEO Elon Musk as a visionary is another aspect of the success of the business. Tesla's consumer base has remained optimistic about forthcoming innovations like the Tesla Bot. Thanks to Musk, his company's operation has become more diverse, thanks to a robotic humanoid that may be used for numbers of different things. The best stock split to invest right now would not have been announced if share prices hadn't improved significantly, following exceptional execution by businesses like Amazon, Shopify, and Tesla. To me, only one of these 3 recently split equities represents the best investment opportunity at the moment, and it's clear that it's not Tesla. In his capacity as CEO, Musk has repeatedly overpromised and fallen short of expectations, drawing the wrath of the Securities and Exchange Commission. Contrary to what the stock price may imply, practically all of Elon Musk's major initiatives, such as robotaxis and the Cybertruck, have been postponed. Tesla are also quite expensive investments, paying approximately 54 times Wall Street's predicted earning in 2023. While other auto stocks trade in the single digits on the future P/E ratios, Tesla is likely to see its competitive advantages fade over time. Despite the fact that Shopify seems to be popular right now, I still don't think it's the ideal choice for you because, as a retail-focused company, it might see slow growth due to increased interest rates and a contracting U.S. gross domestic product. Shopify undoubtedly has a mouth-wateringly sizable potential market, but the company still needs to make improvements to its financial position before it can draw in long-term investors. Although its P/E ratio is alarming for all the wrong reasons, Amazon is currently the best stock split buy of the three. Because of the majority of Amazon's operating cash flow is put back into the business, it is not a helpful indicator to use when determining the company's value. From 2010 to 2019, investors paid a multiple of 23 to 37 times trailing 12-month cash flow, which is a more accurate valuation indicator. Wall Street anticipates that we will make up a larger portion of Amazon's entire revenue by 2025, despite the fact that the company is currently only worth 10 times its cash flow. When compared to Shopify and Tesla, Amazon's stock price will reach an all-time low if its outcomes are as expected. The most valuable and cutting-edge alternative in what may be a long-term awaited battle is now Amazon. The entire self-driving capacity of Tesla may have encountered its first significant obstacle. The resistance to Tesla doesn't include a senior U.S. senator may have met the equal of Tesla's old self-driving capability, contentiously referred to as the driver's assist feature. Either a group of top-tier experts in autonomous driving technology or the most outspoken safety advocates in the nation. The experts have all issued warnings that ostensibly fully autonomous driving isn't quite that. Tesla cautions that the system might make a mistake at the worst possible time, so it needs a watchful human driver who is prepared to take over and make adjustments while it navigates local roads with steering, braking, and acceleration. These opponents may have access to the Senate and other institutions' traditional bully pulpits, but they have little real capacity to change policy on their own. It's possible that the Department of Motor Vehicles, a less than glamorous government agency that many Americans identify with long wait times, will have a more significant influence. The California Department of Motor Vehicles is the first American governed body to openly combat the marketing of fully autonomous vehicles. The National Highway Traffic Safety Administration of the Department of Transportation has historically been in charge of overseeing the regulations of the automotive sector, with Congress providing advice on whether or not to regulate particular technologies like driver assistance system. However, in recent years, the enthusiasm and lobbying surrounding more attention-grabbing technologies have diverted NHTSA and lawmakers. Tesla has long placed disclaimers regarding the limitation of its technology when it comes to fully driverless vehicles. The DMV claims that one Tesla disclaimer, which is misleading and does not correct the offense, contradicts the initial erroneous or misleading labels and representations. It might take a long time to settle the conflict between Tesla and DMV. A settlement might modify how Tesla described the technologies on its website. According to Brian Walker-Smith, a professor at the University of South Carolina Law School who specializes in autonomous vehicles, a system that is used by a driver is deemed to be fully self-driving. And Smith's statement has given me the willies. It may even have new names for its product. What kind of interaction may a human driver have with a completely autonomous car? Tesla said all of its 2016 models were outfitted with the technology required for fully autonomous driving, and the firm committed to releasing the necessary accompanying software shortly after. Teslas that drive themselves will be available in a year or two. The beta version is complete self-driving is available to more than 10,000 Tesla owners. But the software must be constantly watched because it is capable of making decisions that could be fatal. This is not the first time that a disagreement about a language term has come up. The deceptive language judgment from the German court from 2020 was challenged by Tesla. Thanks for watching the entire clip. If you like it, kinda let us know by hitting the like and subscribe buttons. Also, don't forget to enable the notification bell so you can be the first to know when we post a new video. In the following video, I'll see you.